Hey, so I was curious, are rising interest rates about to crush Airbnb hosts? I wanted to see the impact of these interest rate increases and what it would actually do to the profitability and cash flow for Airbnb hosts. So I'm using our Airbnb financial projection template, which I've linked to in the description of the video below, to help us crunch some numbers and actually figure this out. So let's dive into show you what we found. So this is our at a glance tab where you can see kind of our profit and loss at a glance, some different charts and graphs. But once you dive into this, what you'll find is we have set this up with 3 properties in mind, and we have a current interest rate of 3% on these properties. You can see that they're financed. They have a mortgage on them. 75% of the value of the property is mortgaged at 3%. So that is the current setup that we have. And when you look at that, you'll see here's what we're paying on our cash flow summary here. We're paying $169,000 over the 5-year period for loan interest expense based on that 3% rate. And when you looked at the at a glance, you can see that we're profitable. We're profitable right away. In year 1, we have net income based on all the assumptions that we put in here. So let's just make one little change, and I'm going to kind of dive into why we're making this change. So I just Googled Airbnb mortgages just to find out, how are people getting financing? And Cram Capital was the first organic result. I wanted to check out their loan program. They have something called a 5-1 ARM, which is an adjustable rate mortgage. It's fixed interest rate for the first 5 years. And then it adjusts for the rest of the term of the loan after that. And they're on a 30-year term, a 30-year amortization. And so I took a look at the Federal Reserve publishes the 5-1 ARM mortgage rates. And we can see here that they have recently jumped up. So they are now sitting at 3.78%, 78%. But if you look back historically, back in 2008 timeframe, we were up in the 6.3% range. And, the Fed has really just started raising interest rates now. And so the question is, are we going to get back up to these 6.3% rates? And if we do, what happens? So what would happen if you look back 5 years, you need to look back into, let's say, the fall of 2017. So there are folks here that probably got 5-1 ARMs at 3% basically, or 3.17%, that they're going to have to refinance here, or their rate's going to adjust here shortly in this fall of 2022. And so if rates were back up at that 6% range, what would that do to cash flow? That's what I wanted to know. So I came back over to our template here, and I just changed these, and let's just to refresh our memory, we were at $169,000 paid on interest expense before at the 3% rate. Let's just change this to all of these to 6.3%. So let's say that this Airbnb host had to refinance at the 6.3% rate. Now let's take a look at that at a glance. So we're now we have a net loss in the current year. And let's look at cash flow. $329,000 compared to $169,000. So let's just do that real quick. 329 minus 169. So $160,000 in additional interest expense or negative cash flow that would occur for these Airbnb hosts that just have 3 properties that currently are at 3%, that if they went up to 6% on an adjustable rate mortgage, over that 5-year period, you're spending an extra $160,000 in interest expense alone. So I think the answer is yes, it is possible. If rates do keep climbing, that we could see some real pain for Airbnb hosts. But, I think we're just going to have to wait and see. So as you're thinking about should you lock in rates, should you refinance now, lock in your rate, what are rates going to do? It's really hard to know. But we can see that Airbnb hosts that have leverage, that have mortgages, those adjustable rate mortgages can have a huge impact on your profitability and cash flow of your Airbnb business. So if you have any questions or feedback, give us a comment in the comment section of the video below. I'd love to know, do you have a 5/1 ARM? Or what are you thinking about doing? Are you going to try to refinance it now and get a fixed rate before rates continue to go up? Or do you think they're going to go back down? What do you think is going to happen? So leave us comments. We'd love to hear from you. Thanks.